Hello, everyone, and today is May 2nd on a Friday at the early European trading session. And we're hours away from the more important jobs data coming out from the North American session, where everyone is expecting some good numbers as far as job numbers are concerned, prompting the US dollar to move higher and working at 79.57 as of this time, where the opening sessions was more slightly higher from its previous low, which is 79.40 level, where the lowest price was established or registered was at 79.33. Likewise, the more important benchmark for the Dixie is at 78.80 level, which is just a few basis points away from the current price levels. Although this market view report that we're supporting as far as this video analysis is concerned is more focused on cable, which is the sterling pound as we all know it, where it's working at the 1.688184 level, which is slowly and gradually still on the high side of the chart. However, would like to draw your attention as far as market view analysis, which at this time, last April 30th, we have defined that the top heavy US dollar. If you click on this, it would link you to our previous analysis where the outlook was still negative territory for the US dollar, and sterling pound was registered with this particular high at 1.6920 1920, if I were not mistaken. Actually, that's 20, and we were expecting at the 1.6930 level, which is just a few points away. And based on this chart, we have shown you our secondary positions, which we intend to process and liquidate before the non-farm payrolls numbers comes out, simply because it is more logical and a smarter way to go about it. As most of you have followed our sequential trade, once we have stuck with one, we basically have to follow through with a secondary positions where we have established that cable indeed had a stronger tone as far as bullish tone is concerned, and eventually it is nearing a very close resistance level, but we do not call it as a probable reversal, but simply because if this game-changing trend would be made contrary to what the market has been doing for several months now, it would be wiser to be able to liquidate and do a process where we would be entailing a good number of strategies thereafter based on the next few charts. And currently we're on live, as made mention. Cable's working at 1.688285, and the Australian dollar is working at 92.6467, with the dollar yen working at 102.4345, and the Australian yen cross rate is working at 94.8892. If you can recall, we used to have this position with a few more number of contracts, but however, we left one contract just to leave it out and see how far the market would go in spite of the yen's correction. And on a weekly basis, let's see if we can look at here without the prices. Okay, there you go. And right now the Aussie yen is working at 94.89, And looking at now on the daily basis, it looks like more of a consolidation with an up and down swing on both directions. And looking at the yen in itself in a channel formation and nearing that particular channel support at 102.07 or even number. And looking at the Aussie on the daily, well, right now it is near the trendline support of 0.9244. Now, looking at it in both ways here, the Aussie, the yen, and the Aussie yen cross rate, its correlation is more on the yen's action. Looking at here on the interim is the dollar yen, looking at more at a stronger dollar in anticipation of the jobs data today. Now, these prices would basically be determined how the numbers would be coming out, and that's the very reason why we're looking at the sterling yen and at 1.6880. Let's take this out, and we intend to liquidate, but along the way, we would be looking at a strong channel ever since November, as far as we could remember. But here on the chart is from July, since this is a weekly basis, as we can all see that this blue shade is a consolidation, which was really good for scalpers or day traders, moving up, down, and a smaller range here, which basically is also considered a consolidation, as well as a small correction here where we were looking at the levels of 1.6475, 78 level, where it held as a higher low for the sterling pound. And looking at it on a daily basis, as we have seen that the slow upswing and a tail here from the up resisting at 1.6852 before it actually made a move simply because of the weakness in the US dollar, which was triggered by the negative report as far as GDP is concerned, had pushed the cable to a 1.6920 high level here. Okay, there you go. 1.6919 considering it 20 with a low of 1.6870, and right now it is actually having a session correction working at 1.6880 level. We do not discount the possibility that the movement here as far as 1.6829 would be reached on a session basis, but like I said, it's still basically dependent upon the jobs data numbers that would be coming out. Although this particular position here for cable would be good to be liquidated simply because we already have a substantial amount and would not be risking the whole contract size for that. Okay, we'll liquidate it here. There you go. And 1.65849, which is the fractional fifth, the fifth decimal point. Okay, there we go. As it would make more sense for our longer position to be able to tolerate any adverse price fluctuation if it comes, that it would be very good for the US dollar, extremely higher than the 200,000 that they're expecting. So if it does, then well and good. So it is more logical to be able to liquidate those positions on this, which is actually our secondary. And whenever it does on the way down, if it's otherwise for the sterling pound to move lower, then we would be considering to be liquidating our last and final trading for cable for the time being. We're actually at the second month of the second quarter. So with this move, it has moved more than 1,500 pips. Um, More, much more. And that is actually very substantial. Although on a longer time period of a month, as you could see here, that it only penetrated the resistance level, although it's technically overbought and increased momentum ever since the US GDP was really negative. So we're looking at a recent penetration on the monthly charts with a possible resistance level at 1.7025. However, that is more unlikely in one day's movement. If it does, then well and good. However, if it doesn't, it's all right too. But looking at it more in a brighter perspective, we'll see how the numbers work as far as this jobs data would be concerned. Now that that's done, looking at the Australian dollar here, where we have established a long position trying to test the market, although it still looks very close to the support level here at 0.9246. When if it does break 0.9180 90 levels, then we would consider simply cutting our losses. But however, at this point in time, holding an Australian dollar against the US dollar would be lucrative as far as swap uh, rates are concerned, where we would be earning a little more from the interest swaps rather than the exchange rate. This is just a very minimal trade, so we will not really bother too much about it. On the way higher, it looks like it may move on the contrary, depending on the jobs numbers again. As far as dollar yen is concerned, like I said, it is still weighing on a positive dollar report with the the Australian dollar against the yen cross rate. Looking at it on a weekly basis, we still do have that particular position on hand, but we still don't want to liquidate because it's still above the moving average at 94.23. So if it falls below, then on the way down, we'd consider liquidating because right now it's still on an uptrend, an upward channel, and looking at it now would be even more positive. So it would be a deterrent for the Australian dollar against the dollar to move lower. Simply, it's being supported by the dollar yen cross rate on a weekly basis. As far as the recent previous week's down movement with the low of 94.50, then it is merely a correction. Now, like I said, if it does, it will not be as low as this particular trend line, but it's still substantial. So it would be in our favor as far as positioning a carry trade on the Australian yen is concerned, looking at it more on a positive tone and tolerable fluctuations on the low side, which we could manage. And momentum has increased, which is actually in a very good side for that particular position. Although the stochastics is still slightly negative, but it's more of a corrective move. Now, with that said, hopefully that this outlook somehow would help you determine whether which currency would be able to trade. But like I said, it's today is a Friday, and the jobs numbers would be coming out, so it would be much better for us to be on the sideline and just look at it more on a unbiased position where we have already liquidated our sterling pound. So thank you again and have a good day. Only the best for your trades.